Equity markets had corrected sharply on Friday in what quickly turned out to be a Black Friday for global market investors. Over the weekend, the markets have begun Monday again correcting sharply, and it is quickly turning out to be a manic Monday for investors around the world. Look at how the indices have reacted today. The Japan's Nikkei 225 average is down more than 6%. The South Korean Kospi is down over 5%. The broader MSCI Asia Pacific Index outside of Japan is down an eye-watering 7.5%. So not surprisingly, Indian markets have also reacted negatively with both the Sensex and the NSE Nifty50 index down more than 4%. The US futures as well as European market futures have indicated there will be a gap down opening there as well. So globally, it is going to be another bad day for investors. Now, why this is happening is because of the whole rising uncertainty around how the reciprocal tariffs announced by US President Donald Trump are going to unfold and impact the global economy. JP Morgan has said in its recent comments that the chances of a recession in the US and chances of a global recession have gone up to as much as 60%, up from 40% earlier. The expectation is that these tariffs will make imports into the US expensive. So the consumers there will cut down on spending. That in turn impacts the US economy and has wider ramifications on the global economy and especially the exporting countries. Now, India, for instance, finds itself in a middle position. It has been slapped with a 26% tariff, which is more than countries like the European Union and the UK, but it is also significantly lower than some of the major exporters from Asia, be it China, be it Bangladesh, be it Cambodia, be it Thailand, be it Vietnam. So India sort of finds itself in a middle position, but it is certainly not immune to the ramifications the Trump tariffs will have on the global economy. For instance, in this uncertain economy, the US corporations are likely to cut down on their spending. If discretionary spending is going to come down, then software services exporters from India like TCS, Infosys, Wipro and all the others will also get significantly impacted, and that is why their stocks have corrected sharply in the last few days. Now, it's worth remembering that this sector had already been through a slowdown for some time, and amid this whole tariff related uncertainty, the recovery of the sector is only going to be delayed further. The expectation was that after the crash on Friday, the US President Donald Trump would sort of open up a window for countries to negotiate the tariffs and maybe hold on to the tariffs implementation. But over the weekend, Donald Trump told reporters that investors will simply have to take the medicine, and he was not going to relent on tariffs, especially on China, till the trade deficit issue was sorted out. And that is why the markets have begun correcting again on Monday as well, because essentially nobody knows how this tariff impact is going to pan out. China has already reacted with tariffs on US imports. Some of the other countries have said that they are ready to negotiate with the United States on the tariffs imposed on them. India has already been in discussions with the United States on a bilateral trade agreement. No one knows when the negotiations conclude and a deal is in place. The earlier we do it, it will be better, but again, it's anybody's guess when that is going to get concluded. So in the interim, as tariffs start getting implemented, companies around the world are bracing for a huge impact. In sectors like chemicals, which have exposure to the United States, companies are staring at some impact. When Trump initially announced the reciprocal tariffs, he had left the pharma sector out. The United States is the largest export markets for Indian drug makers. They heaved a sigh of relief that the tariffs will not be implemented. But a day later, Trump said that tariffs would indeed come to the pharma sector as well after a point of time. So these stocks have also fallen over the last 2-3 sessions. Several other specific stocks which have exposure to the US have also reacted sharply. For instance, Tata Motors shares are down significantly today after its luxury Jaipur Land Rover unit announced that it was halting exports to the US till it renegotiates the terms of trade in the wake of the tariffs. Now, the United States is a large market for Jaguar Land Rover. Not surprisingly, there will be an impact on its sales in the near term, and that is why Tata Motors shares have reacted the way they have. Now, how things pan out over the coming days and weeks is anybody's guess, and that is why investors need to adopt a wait and watch approach, say analysts. Beyond the tariffs, there are other things to watch out for as well. The Reserve Bank of India's Monetary Policy Committee is meeting from today. The announcements will be made on Wednesday. The expectation was that with the inflation starting to come down in India below 4%, there was room for the Reserve Bank of India to cut its benchmark repo rate by another 25 basis points, following the 25 basis points repo rate cut in February. Now, in this wake of this whole Trump-related uncertainty, the expectations of a rate cut and further rate cuts beyond April have only increased, according to economists. The US Federal Reserve earlier was expected to go slow on rate cuts there as inflation had started inching up again. But if the US slowdown is going to get worsened, probably if there are chances of recession, as many global brokerages and investment banks are now pointing out, then the expectation would be that the US Federal Reserve will also start cutting interest rates at a faster clip than what was expected at the beginning of the year.